the 50s and 60s down into the 30s, they said this is a bear market, it's over. But the shrimps were telling us, no, it's not over, if the growth rate continues, which it has for 12.7 years. So very compelling data. Before the bids and ask, enter the order book, and if you remember the purple line, that was the line which I've just closed the tab, that was the line that was those coins moving into or out of the exchanges before the bids and ask get put in. And so if you see an influx of coins moving to the exchanges, you know what's going to happen next, right? So that stuff's very accurate and reliable. And so, but going back off that, and you can look at that as a metric on demand and supply, you can do a look back, and you can see, these dots are the look backs, and you can see right now the price really needs to go up into this high $50,000 range to normalize. There's a demand and supply imbalance currently. So if you guys are listening to this, and maybe it'll take a week or two before you're listening to this, the price should, if this is correct, should be up in the on its way into the mid to high $50,000. We're currently sitting at $50,000 exactly. So this will be an example of a prediction which I'm making here on air on Real Vision. So this demand and supply model says we're going to probably 58,000. So that's one, and here's another, right? This is Bitcoin entities. So we can cluster all those wallets together, and we can go, these are individual people. And what you're seeing right now is the buying and selling habits of whales, essentially owners of 1,000 Bitcoin or more. So that's $50 million of Bitcoin wealth or more. We're tracking their buying and selling habits. So we're getting a high resolution view into the blockchain to see just what these guys are doing. They're obviously old time, Bitcoin sort of OGs from way back when they bought their coins cheap, or they may be hedge funds. So you can see here there was a large amount of buying in this zone here, and there was just a matter of time before this level would break out to higher levels. And we're again sitting in that zone right now, right inside here with a lot of whale buying. And so that's suggesting we'll go up. And I've already shown we're likely to go to 58,000 because of that demand supply imbalance. And now we're getting a big shove by these large whale buyers. And then I'll take you to another view, which is the other end of the spectrum, which is the buying and selling habits of what we call the shrimps, the guys with less than one Bitcoin. And you can see that there, right? And you can see that, and if I pull the chart back all the way back to maybe 2016, and you can see that it's all green mainly. Shrimps do not sell, they stack their sats, they accumulate and they accumulate. It's a savings plan for them. So these guys continually buy as a cohort, but you really want to see when their buying habits start to reduce, because when they start to taper down, that is a start of a full-blown bear market for Bitcoin. So a lot of people that are probably new to Bitcoin, when we had this drop down into from the 50s and 60s down into the 30s, they said this is a bear market, it's over. But the shrimps were telling us, no, it's not over. We're not seeing this kind of reduction here where they're reducing their buying. They're actually taking that opportunity to buy the dip. And so structurally, this was a bull market. On-chain said this was a bull market. Price analysis said it was a bear market. And you can see on-chain was correct. We did recover. Same thing with the COVID crash. This anomaly that happened on the market, the shrimps bought that hard, which is very, very compelling for the start of a new bull market. And so that's another view. Like the whales tend to be short time frame focused. You can use them for signal on the directional move of Bitcoin over the next few days to weeks. But the macro, the shrimps dominate, because we're talking about a sea of millions of people accumulating. And that's a lot of those are new people coming into the network, because again, Bitcoin is growing at a phenomenal pace. So like we're currently about 150 million people with exposure, direct exposure. We're on track for 1 billion people in 2025, actually. So, and that actual data we can get on chain as well, because we're tracking the growth of these participants, and we can see, and we can actually make a count, because we can see it on the blockchain, how many people are coming in. And then, you obviously have got to augment that data with, surveys done at the exchanges to see what their growth rate is. And we can actually see, just how quickly this network is growing. And it's, cheat sheet here, it's growing faster than any other network in history, faster than the growth of mobile phones. So Bitcoin will be near saturation in the next 8 years, and that's multiple billions of people using it. If the growth rate continues, which it has for 12.7 years. So very compelling data, all seen on chain. So yeah, this is another heat map. This shows the buying and selling habits of the Rick Astley's, the long-term investors. You can see very telling. They were selling here. They were responsible for this real run down in price. And again, you can see the accumulation happening. So real high resolution views into demand and supply of this network. And then what I'll show here is the final in the supply shock family. Remember, it's coins you cannot get versus the coins you can. And you can look into the network and you can say, there's actually a sea change of behavioral difference. You can look at coins and how many, days, months, years they've aged in the wallets before they next move. Like how long is the investor holding their coins, and you can run a probability distribution of, if it's a 1 day old coin, what's the probability of it's going to move tomorrow? It's usually quite high. And as those coins age over time, the probability that it continues to move drops off. And there is a sea change that happens at this magic 5-month mark, the 155 days. There is a threshold that crosses where the probability of it moving starts to drop off rapidly. And so we use long-term holders in this definition as the coins that have been aged 155 days in the wallet, because we know at that point it's unlikely they'll move. Therefore, these are the coins you cannot buy. Anything older than 5 months, very low probability you'll be able to buy them, because low probability they'll sell. And so anything under that is high probability that you can get access to those coins. So we run that ratio and you get a really nice macro smooth chart, right? And so this is at peak long-term holders, peak amount of coins that you cannot buy. And we're moving up into the zone here, and you can see every time we've had this peak, we run up, right? These are accumulation bottoms of a bear market that drives the bull. That's it there. This is the reaccumulation bottom of this bull market, and we're now just entering the second great reaccumulation phase of this bull market. And you can see, I've marked it up in this chart here. And so this is the same chart. I've marked it up. And you can see this is very clearly these peak accumulation phases. And we're currently in entering this zone here. And we don't know how long this will last for. But let's say it lasts for this amount of time. Maybe it's shorter. We do get a rally, and that rally is multiple months, and it's usually very powerful. And so there in itself is the chart backed by on-chain data, quantitative data that says there's no bear season in sight. 2022 is going to be up only. And so if anyone's listening to this from the future, you can see if this is correct as a validation of this on-chain kind of analysis of demand and supply. So yeah, there you have it. This is the stuff that I like doing most these days, because it's it's very fundamental. Markets are driven by demand and supply. So I really like looking at things that are proxies to the direct demand and supply that investors are exhibiting through their behavior in this network.